Third quarter is in the books, and while the weather is cooling down, the apartment market is not. It is continuing to heat up on every front. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons. He's Greg Willett, and today we have nothing but good news to deliver. So, Greg, we can start with any metric and certainly tell a very good story. What's your take on the headline number?
I think the headline number actually has to be that rent growth for new resident leases continuing to surge as we've seen over the past couple of quarters. Right now, we're seeing that in third quarter, the effective rents for new resident leases jumped 2.2%. That number is 90 basis points above the already solid result that was seen in third quarter of last year. So annual growth is really climbing. Viewed on an annual basis, effective rent growth for new resident leases comes in at a whopping 5.9%. Yes, that was 5.9%. That's the strongest increase seen so far in this market cycle, and it's a level that really was seen only in one time period historically, and that's going back to those tech boom days of 2000, 2001.
Yeah, and that historical context is important. And here's some more context for you. We've talked a lot about just how long this cycle has been. And so let's compare it to the last upcycle that we saw from 2004 right through the first half or so of 2008 before the recession hit. To date, annual rent growth in this cycle has been positive for 21 straight quarters, and the average annual rent growth hike has been 3.7%. In that last cycle, the average was 2.8%, and we saw positive numbers only in 19 straight quarters.
So, Jay, one more interesting metric that we've got on the pricing side, we're now able to track what's happening with renewal lease pricing. So talk us through those numbers.
Yeah, some very good numbers on the renewal side as well. Remember, renewals are generally half the rent roll, so this is a big deal. Renewal leases topped previous leases by 5.4%, meaning that the average renter renewing their lease paid 5.4% more. That's another high point in rent growth for this cycle. And importantly, it's coming during the warm weather months. And that's a big deal because in the spring and summer, that's when renters are most likely to move. Retention rates will fall down a little bit. But retention rates actually remain at historically good levels. Leases that expired in Q3, 51.1% of those renters chose to stay in place, renewing their leases. That's a little bit below the seasonal peak we saw in February, but that's very normal. But it's definitely above what we saw in this time last year.
And with those huge rent growth numbers, the occupancy numbers have to be great as well, and they really are. As of Q3, average occupancy across the U.S. is 96.1%. Every quarter we think we can't go much higher given how tight the existing stock is, but still trending up a little bit on an annual basis, up 30 basis points.
And let's take a look at the supply and demand numbers that get us those occupancy rate. One thing to note when we look at these figures is that new deliveries in the second half of 2015 were expected to surge to about 100,000 units a quarter, double the quarterly average seen in the first half of the year. But actual completions didn't quite go up that high. Now, they did climb from the previous pace, but we continue to see some construction delays. So properties finishing up in Q3 totaled 69,299 units, and then net demand proved stronger at 85,689 units. And then turning to the annual results, completions in the 12 months ending in September came in at 236,606 units. And once again, demand was even stronger. A very good number, 260,430 units absorbed.
Let's turn to the product that we've still got under construction at this point. And this number looks a lot like what we've talked about in the past few quarters. At the end of third quarter, the number of units under construction is 436,407 units. That slowdown in building activity that folks have been anticipating for a while just isn't showing up yet. We're steady as she goes here. For quite a while now, we've been at 400,000 to 450,000 units under construction at any given time. We think that's actually a pretty reasonable amount that the market will be able to deal with. A lot of new supply, but at the same time, look at those demand influences. We still are anticipating very solid job growth, and those older millennials, people like you, are not yet showing too much interest in jumping out and buying homes.
So, Greg, you grabbed the occupancy portion of the outlook, so that leaves me with the rent growth, which is obviously the harder part of this equation.
thought you could probably handle it.
Well, I hope so. Now, the challenge has been that over the last 18 months or so, pretty much everyone has continued to say rent growth is going to slow down, it's going to slow down. The opposite continues to occur. So the question is, with no real storm clouds on the horizon, how much better could these numbers get? Or can we continue to see numbers as high as we're seeing right now? And our view continues to be that at some point rent growth is going to slow down, and we think over the next 12 to 18 months we're going to continue to see strong rent growth, but not quite at the incredibly high numbers we're seeing right now. Our expectation is that rent growth is going to hover around 4%, which again, historically, is a very, very strong number. And the big question, of course, is what happens in the West. That's what we're going to have to watch, because so much of the rent growth occurring right now is driven up by the big, big numbers we're seeing in the West region of the country.
Those West numbers are pretty phenomenal. In fact, that leads us into the next video that we're going to do, which is on the nation's rent growth leaders. And we have 14 markets across the country where annual rent growth is above 7% right now. 11 of those are in the West. So you can look for that video coming up on the nation's rent growth leaders. But we'll wrap up our U.S. summary. He's Jay Parsons. I'm Greg Willett. Thanks for watching Apartment Market Dynamics from MPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.